Hey everybody, we got a special treat today. One of our students had an algorithm he was building and he was losing a trade or two, so I had him open up his algorithm in a way that I could look at it, and we did some editing. If you're watching this on YouTube, you're going to get a little bit longer of a clip because you get to see the whole thing. If you're watching this on TikTok, I recommend going over to YouTube so you can watch the longer version of this and see how we're able to take an algorithm with decent or questionable effectiveness and really do just a few minor tweaks to go ahead and really expand how effective it is and create more profitability. So, bottom of the screen, see the website, www.algofactory.tech, or go ahead and zap that QR code. It'll take you to our website. And if you stick around after the video, you'll see more about how to find us and what we do. Thanks for watching. To recap here, you go to your trading view. You go to the title of your charts. Whatever chart you're using, doesn't matter. You click this down arrow where it says Manage Layouts. And if you're going to share with somebody else, you toggle this sharing button, right? And then it will give you a chance to copy a link, and then you can take that link and paste it over to whoever you want to share it with. So I have that link. So what we're going to do is go open up a new tab, paste that link. You have to have TradingView in order to do this, and I believe you have to have a okay, I didn't copy that link properly. I believe you have to have a paid version of TradingView to have this this capability. Okay, so that link went in properly, if you will. Now Trev's screen is white. Mine, I have everything dark because it's just easier to see. It's like less painful on the eyes. Okay, so what I'm seeing with Trev's algo here is triple screen. You got a 12-hour. Okay, he's got it backwards. He has his 1 hour on the far right. That's probably his entry time frame. I think we talked about this yesterday. 3-hour time frame in the middle. 12-hour time frame on the left. The left is going to be high time frame bias, right? So right now bearish, looking at these indicators. The middle is going to be the trading time frame. So that's he's basically a swing trader trading in the 3-hour time frame. That means that each of these bars, each of these candles on the chart in the middle section is 3 hours of price action. And on the right is the entry time frame, which is the 1 hour. So what he's doing here is these metrics over here in the 1 hour are kind of a precision entry tool. Okay. So that being said, it's going to be a little backwards. I'm used to having the high bias on the right and the low bias on the left. So I'm going to make a copy of this. Top right, there's a button that says copy. I'm going to call this Trev Live Copy. And because I can't have my brain fried, I'm going to switch his time frames around because I can't work that way. So give me just a second. I'm going to move his 12-hour to the 1 hour because I read left to right like most people in the Western world. And then I'm going to move the right time frame to the 12-hour. Okay, so let's see here. Okay, so now we are looking at the high time frame bias, and on the right, trading in the middle, precision entry on the left. Our indicators are, I'm going to drop down this little number 2. We have a stochastic RSI on the bottom. We have EFI, Elder Force Index, in the middle, and we have MACD as an indicator on the top. So some pretty good indicators. I use them. It looks like perhaps he may or may not be using some custom settings on his RSI. So, I don't know what these settings are. Trev, go ahead and tell us why you're using those settings. Let me go ahead and there's a bit of a lag in the video here. So let me ask him why those RSI settings ? All right, so he's going to tell us that as we're reviewing things. I also have a set of rules for the algo, so we're going to look at those. Okay, so we have MACD, source oscillator signal. Okay, I'm not sure I understand. Okay, so trend, 12 hour, 3 hour. This might be hard to read and I can't make it any bigger. I apologize. Convergence only, 90-minute for signal. 1.5 hour LS signal must cross in trade direction. LS. Okay, so Trevor, we're going to have to get together in the back for me to understand those notes because I just don't understand them. Okay, so these RSI settings that he has for his inputs worked in his testing. That's why he has those. So that's good. You tested them, works best for you. In this case, what we have here is, so you have an RSI cross on the right, okay? You have in the middle right now, what I'm seeing is an MACD cross with your EFI being bearish. And that happened right here. Now your Bollinger Bands, I'm not sure what you're using your Bollinger Bands for. That's this indicator that's actually on the price, right? I know Bollies can be good in the right circumstance, but they can also be problematic. In this case, I would not have gone long here because I can see that you tested a long trade, right? Right here. But here's the problem with that. Look on your far right. Look on your 12 hour for your high time frame bias. If you look at your MACD, the signal is pretty flat right here. So let me blow up your 12 hour. Your signal line was pretty flat, but here's the problem with that. Your signal line is below the 0 in your MACD. So you're mostly going to be bearish. If it starts to really push up above, you might have a bullish moment. If you have like an MACD cross, signal line tilts up, you might have a bullish moment. But at this point, when you took this little long trade right there, your MACD was not only was it beneath the 0, which is just bearish in general, but it was already looking like it was kind of flattening out and tilting the other way. So you may want to consider only taking trades that are longs. This is how I would do it. Okay, looking at your algo. Okay, Bolly's just for visual of trend. All right. Well, I wouldn't even, if you're the Bollies, I'm not a big Bollinger fan. They're useful, but if it's just for a trend, you already have that on your high time frame. I don't think you need another indicator for that. And they're just going to make you think. Bollies might confuse you into taking a trade that you're not supposed to take. I personally would take the Bollies off. I wouldn't even use them because they're not, unless you actually factor them into your algo, then if it's just there to look at, then what do you need it for? You have high time frame bias. You have a trend on the high time frame. You have your EFI below the 0, which means bearish. You have your MACD below 0, which is bearish. You have your MACD starting to curve down, which is bearish. So, what do you need the Bolly for? Cool Cat, good morning, my friend. So I would actually not even use the Bollies personally, but if you have factored the Bollinger Bands into the algo, that's another story. Then you got to keep them. But I took it off just because I wouldn't use them. In this particular case, though, what I would do if I were to trade longs, I probably would use, let me see here. An easy way to do this, okay, is if MACD is above 0, so this right here, if this, let me blow up the MACD. What you could do is MACD signal has to be positive sloping and above 0 to take longs. Okay, so, and this is, you can do what you want. I'm just telling you how I would do this to really make sure you're getting winners. If MACD touches and is above 0, and the signal line is sloped up like this, that's the time to take longs, right? If MACD is below 0 and sloping down, then that could be a time to take shorts. And this is on the 12 hour, right? So basically, like, you're going to have some noise, right? So you're going to have like where, MACD popped above and then it kind of goes back down. But that's on the 12 hour. You should have time to take trades even in that circumstance. But if I were to put some vertical lines, like right here and right there, and those will be where we go long, right? So let me go ahead and go to our 3-panel screen and go back to where those vertical lines exist on the 3 hour, right? So I'm going to have to redraw those. It's fine. Give me 1 second. Okay, so in between these lines, your long trades are going to work out, right? I mean, MACD is above 0 on the 12-hour on the far right, where my mouse pointer is, and MACD is positively sloped. Now, you're going to get tempted to want to trade where MACD has sloped down because you will win shorts on that, and maybe that can be your algo. But for sure, much more likely for MACD line to be above the 0, MACD and signal to be above 0 and positively sloped. That's a really good indicator of positivity. So, in fact, to refine this even further, I would just go ahead and move my lines like right there to refine this even further. And then if you're only taking trades during that period, look at this on the 3-hour. Look at this period on the 3-hour. Nothing but moving up. So, if your signal is like, say, MACD crosses, then your longs are going to look like this. Let me see here. You would have a long here, and that looks pretty good. Let me zoom this in a little bit. We're going to go just a little bit over since we started late. Give our beginners some good amount of time. And I don't know how you're doing your stop losses. Maybe you're doing like ATR based, which is pretty solid way to do it. Pretty common, until you really have tested things. But obviously that's a winner. Then you're going to have perhaps another MACD cross, a solid one, like right about here. So here's another long. I mean, that's kind of a decent cross, and again, I don't know how you're measuring your how high you want to go with your trade, but either obviously that's a pretty big win, no matter what you're doing. It's at least a win. Here's another MACD cross above the 0 line on the 3-hour, and that has the potential to be a big win, certainly a win, but it could be, all these are really big wins. And then you have MACD kind of sloping down and then recrossing, say right here. Right there is a pretty solid cross. You can enter even a little bit later to be safe, and you have a win like right there. And you have a pretty high like dip and cross again, but I think it still could be a win, but you're starting to get to where it's a little deep in the trend, so you might not have the risk to reward that you need. But still, it's technically could be a win. So, that's like one where it's like, maybe I'd take it, maybe I wouldn't, but it would be like right here. But it has a better risk to reward because you're getting into a decent kind of area of the trade. So that's 1, 2, 3, 4, 5 winning trades based on, kind of whatever the new look is on the algo that we've talked about. And that's between July 6th at 10 a.m. through July 13th at 2200. So that's a week. That's that's like a trade a day, right? Because this is only open Monday through Friday. So you're having a successful trade a day on this. And then as the, as things go, I mean, you may be able to find a way to trade this because on the high time frame, again, we're looking at a situation where the MACD is now sloping down, but it's above the 0 line. So if I were to go back here, you'll see what I mean. So we'll start using different colors here just to end this conversation. I'm going to go ahead and mark where this MACD flips bearish right here. So we're marking here, right? We're going to code it yellow. All right, so as this flips down, the problem is that the MACD is above the 0 line. So, it technically is against the rule that I have stated. But if you're a little patient, you'll find that your trades are probably going to be better winners if you went ahead and followed that rule. Or, because obviously this area right here, not this yellow, but this yellow to here, those are winning trades. So if I were to go back and do shorts from here to here, then you're doing great. Watch. From yellow to yellow, you've got these MACD crosses, right? And you've got, let me blow this up real quick. Did I do that right? Let's just make sure I've got this correct on the high time frame. Okay. Yeah, okay. So I've got yellow to yellow here, and it's from the time that the MACD crosses the zero line, right? So I'm ignoring any trades on the higher time frame. I'm ignoring the ones where the MACD, although it is crossed to go in the direction we want, it is above the zero line. I'm ignoring that, okay? I'm actually only paying attention to when it's below the zero line, and it's going to be in between the two yellow lines, okay? So if we look at the MACD crosses on the 3 hour, you'll notice they're all below the zero line here. And you will see that you can just short the living daylights out of these. So you have, I'm going to go ahead and actually blow this up a little, this MACD up, right? So you got to cross 1, you got to cross 2, you got to cross 3. Those are 3 trades in that area. So let's go ahead and take a look at what that looks like on the chart. And again, we're going just a little bit over on the beginners today. So, you know, we're trying to give you guys that full half hour since we started a little late, and that's on me. It's my fault. So don't blame the gorilla. All right, so we got this. We're going to code these magenta for now. Okay, so we can differentiate. Okay, so we got that one. We have this cross right here. We have this cross right here. Okay, so that's three decently successful trades, at least 2. This third one is probably okay. You know, I'd have to go on a lower time frame for the entries on that. In fact, that's what we'll do. So let's go ahead and blow up the lower time frame. All right, so our entries on this, and again, I had a hard time reading your rules, so I don't know what your entry rules are, just because I can't read your notes. You know, we'd have to discuss that. But in this case, you could use MACD crosses below the zero line, or even an MACD cross that is just in the direction you like. You know, you can use that. You just have to make sure that you have the right risk to reward ratio, right? So you'd have to look back, see where your structure is, where you have to worry about structure points, and maybe perhaps that's how you're choosing your targets. I don't know. You know, there's ways to choose targets. You know, we can talk about that. You can use fib extensions, and there's a lot of different stuff. Okay, so you know, but I'm not going to get into the target. That's just going to take too much time. But I'd say in your case with this particular chart, I'd be looking at maybe fib extensions. Structure's good though, but either way, we have it where these red lines are where we saw the 3 hour MACD flips, and we can refine that down, move this forward to where we actually see the flips on this time frame. And perhaps you didn't get into this until here, probably. That's not, you know, it looks like a great trade, like you could get in before that big red bar, but the chances are you didn't. So we're going to be realistic about this, right? Here, you probably didn't get until here. And here, you probably didn't get until like right there. So we got to be realistic, right? We got to err on the side of not as good as you hope. So we got to be realistic. So anyway, so you probably could have like a nice trade like this, a 1.13 to 1. Actually, I probably would have a tighter stop than that, to be honest. Let's move this a little bit. Yeah, so probably something like a 1.5, 1.25 to 1. That's a winner. You know, again, I'm eyeballing this. You're going to have your own measurements for your exits and your entries. Like, you can't just eyeball it like I'm doing. I'm doing this strictly for the show. But you probably would have an entry like right there. You might have a stop up here. Still a 1-to-1, you know, depending on how you're doing your targets. And then your last trade might look something like, you know, you probably could pull a 1-to-1 out of this because the stop could be relatively tight if you're using structure. I don't know. Again, you have to really go with your formula on how you're doing this. But I'm going to err on the side of not such a good entry. You know, and again, you don't have to guess like that. I'm only guessing because we're doing this like really quick. But I'm going to say that this is probably your trade, which is like a 1.5 to 1. So once on the high time frame, your MACD crosses below on a short, below the zero line, that's when you can probably get a series of trades. And that's 3 solid trades. And I'm really being like not generous on the risk to reward. We're looking at 1.2, 1.0, 1.5. And that's between July 19th to July 23rd. And again, there's a weekend in there, I think 19, 20, 21, 24. So yeah, you're looking at a weekend included. So you're having 3 trades in as many days. 3 trades, 3 days. So your algorithm, when the conditions are in play, then you're getting about a trade a day-ish, according to this very cursory backtest. But remember, you're going to have all those days where the conditions are not in play, right? So, and according to this, just a quick look, the conditions are not in play about half the time, right? It's about half the time. So you're going to get a trade a day when conditions are in play, and about 50% of the time when you're just not going to trade for a few days because they're not in play. That's how that works. It's a nice algo. I've basically gotten rid of the need for your EFI and for your stochastic. So you can pretty much run this algo with no Bollinger Bands, no EFI, no stochastic. You're just using MACD very well. You're using a lot of confluence. MACD below the 0 line, sloped negative. That's a really hard thing to lose when you're shorting that. So that's what that is. Now, we don't want to just blindly get rid of these other indicators, because what those can do is they can get you in a little bit ahead of time. It might be for, let me just erase all this gobbledygook. It might be that your EFI is able to give you a clue as to what's going to happen a little early, right? So for example, we didn't get into any of these trades until the MACD dropped below the 0 line. But if you look at the chart, there was the ability to short before that. The price was going down before it dropped the 0 line. So you're kind of missing out on some trades, is what it feels like, right? Well, look at what EFI does. EFI crosses that 0 line prior to. This is the EFI down here, this red one. EFI crosses that 0 line prior to the MACD, right? So what you could do is, okay, MACD, like your rule could be, instead of waiting for MACD to cross and losing 2 days worth of trading, or a day worth, well, this is 2 days worth of trading, you could actually look for MACD to be in the right direction and very solidly heading down. You have to have some kind of metric, right? And then if the EFI crosses, then you might be able to start taking trades a little bit earlier and use EFI to expand that period of time we can take the trades. Because look at this on the upside, right? Let's just say you want to take trades between, you want to take advantage of this little long area that I just marked out, and I'm going to code yellow. Okay. So, let's say you want to take advantage of that. Well, if you're waiting for the MACD to cross, the problem is that it doesn't cross until here. And it's not very likely you're going to get more than one trade or any at all in the last 2 bars, and you've missed this whole move up. So the EFI, if that pops above 0 and MACD's heading in the right direction, then you might be able to go ahead and get a trade early, like right in here somewhere. So what you could do is either you have to test, like, okay, if the EFI is crossed but MACD hasn't, is the success rate on those trades a little bit less, right? Once the MACD has crossed, is the success rate a little bit more? If it's the same, then you can pretty much just use MACD as a directional signal and EFI as your cross. Now, if it's different, you can still use the MACD as a directional and your EFI as the cross, as the trigger for, let's go ahead and look for trades. But you could probably put a little bit less of your book on the trades until it crosses or at least touches that 0 line, right? It all depends on your success rate of the trade as the MACD crosses. Okay, so and this is the refinement of your algorithm, right? So I know I just went through a lot, so I'm going to kind of end that for the moment. I see you wrote a note in there, Trav, RSI and EFI for entry. You're combining the RSI and the EFI for entry probably on the 1 hour. So if I were to go to the 1 hour, let me see, potential trade on this long section is going to be, let's see, I'm just going to see if I can identify what you're talking about here. Okay, we'll go to this area right here to be sure. Okay, you don't have your mouse synced up, so you're going to want to do that. Okay, so right here, good. All right, so now I need to find that right here. So let's blow up the 1 hour. RSI, RSI, EFI for entry. So I'm assuming that what you're doing is you're looking for an entry on a short. In this case, you're looking for RSI, this on the bottom. You're looking for that to flip short, which happens right here. And I imagine that you need the EFI to flip short at the same time as the RSI for your entry. So, whoops, wrong button. So what that would look like is, or maybe perhaps EFI just needs to be below the zero line, which it is right here. And if that's the case, then you got a nice entry, and that entry would be ahead of the entry that we sniped out on the prior test. So that's a way to combine RSI and EFI on the low time frame for the entry. So that's, you know, that's good. And again, review this video because we're now coming to the end. I basically ran a clinic this morning, and I did it for free for people who are online. Understand that, you know, I do this all the time. Like for nowadays, at least, I'm doing this more in our private group. So this is probably not going to happen too often on the public group, but sometimes we got to show the public what we do so they can understand, you know, what we can do and we can do for them. And but, you know, I would only do this for a private customer. So we are live every weekday, 8:30 a.m. EST, giving out free content. Come check us out on YouTube. Come talk to us. Go over to the website. That's www.algofactory.tech. Again, www.algofactory.tech. And for a limited time promotional offer, we are giving out memberships at $49.99 a month. There's a ton that we're offering over there. Come see what that's about. Also, you can see our Twitter link. All the links are up on YouTube. Come talk to us on social media. See us on the live YouTube videos. We hope to see you soon.